How much of the weakness that we're seeing is due to the auto strikes?
Well, I think there's definitely some of that. I mean, I had a lot of comments. Somewhere close to 9% of my headline comments were about the auto strike and when it would end. Good thing is it's behind us now, so we won't be looking at that as a headwind in November, which is really good. But, to Mike's point, sometimes lower is better. Like in the employment number, I think the low employment number is actually good because we've been waiting for companies to start to shed people. The new order number was probably the biggest disappointment, coming down to the 45.5. That's not very good. We were hoping that with prices coming down last month, lead time shrinking a bit, that at the end of the year, we'd see buyers and sellers re-enter the market and re-up. And it didn't happen in October. So they need to re-up for the first quarter for sure. But there's generally a reluctance to go ahead and do that as represented by that low new orders number. Overall, demand was weaker than expected for sure. The new export orders was the only bright spot, came close to 50. Customer inventories is about right, which isn't very good. And the backlog continued to shrink at a pretty high rate. So on the output side, which was a good story, production was flat with the prior month of September, which means they're still building at the rates they were in September, which is positive. The other good thing here, like I said, the employment number coming down is definitely positive. I see that as companies are now taking more drastic action to cut their headcount. In fact, 50% of our force reduction comments were layoff related. That's the highest number that we've seen since I've been tracking it.
Tim, it's Guy. Good morning. You've talked in the past about the fact you think we're at kind of the bottom of the trough. The question only really is how long we bump along the bottom. Is this just bumping along the bottom data?
Well, I'm hoping that it is. I mean, the big surprise here was the new order number for sure. I mean, coming in at 47, 48 would have been a lot better than where it came in at. But, we'll see what November brings. We're re-upping now for 2024. We have to lay the order streams in. Stuff has to get underway. The price growth has probably declined a little bit. The energy scare is off a little bit. We have a lot of our commodities in both an up and a down transition, which means that we are transitioning from what had been up to something that's down. So, I think the manufacturing inventory number came in surprisingly low, too. That's a good thing, but I think it's got room to move up. The supplier delivery number is going higher, which means they're having more trouble delivering, which is a good thing. So the big surprise here was really new orders. Now, remember, that's future. That's really not today. So we're just going to have to hold on and wait and see. Yeah. I still think we're in the trough, but we're at the low end of the trough for sure.
I mean, that's kind of what we heard from Caterpillar, right, yesterday, that just the backlog is rough and they have to clear the stuff. And that's kind of where they are in the cycle. We also are seeing from earnings that the phrase weak demand is one of the top used phrases on earnings calls. This is obviously reflected in your data also. Can you give me more detail as to what industries are seeing that and what the commentary is around that?
Sure. So we've had a 2-to-1 positive to not so positive perspective from the outlook standpoint at the headline comment level. This month we dropped down to 1.3-to-1, which means that we had more people who are pessimistic about the future than the prior month. So that's a bit of a concern. And then we've had our third straight month of over 25% of our headline comments commenting around continual softness, which if you have enough softness over time, you run out of stuff to work on. So I think that's where you're hearing the absence of demand. We've been seeing it now for quite some time. You're hearing it in the earnings calls. Not a big surprise. Here it is.
Tim, can I come back to the employment story?
Yeah, let me make a comment here. The industries that we really saw the big impact on were the capital-intensive stuff. So computers and electronics, fabricated metal products, machinery. Those are the ones that really drove that new order number down. The three of those together are close to 30% of manufacturing GDP, and they were contracting really strongly. Several of the other big ones. That's the rate
story, right?
Yeah, that's kind of it. That's the rate story. That means we're not sure about the future. Let's kind of wait a little bit. We're not going to go ahead and commit that money. Therefore, the new orders don't flow.
Tim, just to come back to the employment narrative, there has been this concern, and I hear it certainly when I talk to people within the aerospace sector. Laying people off means a lot of kind of intellectual property walking out of the door. Has that been the lesson learned? Does that continue to be the lesson learned from manufacturers from the pandemic? What do you make of the fact that employment has dipped? You talked about that potentially being a positive. Is it really?
I see it as a positive because if you don't reduce your headcount, you're not going to make any money. If you're not going to make any money, you're going to be in trouble. So at some point, you have to kind of face the facts that demand is not what it used to be, and it most likely will be a little bit less than what we're hoping for. I'm overstaffed for that, so I have to take steps. We've been talking for quite some time back in May. We had a pretty significant amount of comments around layoffs versus freezes and attrition. Then June, July, August, September, it was primarily attrition, then it went to freezes. In the month of October, layoffs are over half of our actions with respect to layoffs, attrition, and freezes. So people are taking more drastic action now. Layoffs is obviously the quickest way to reduce your headcount. We're now going into November, coming through October. So companies are seeing that, okay, I know I spent a lot of time and money to build this workforce up, but I'm not going to need it for 6 to 9 months. Therefore, I got to do something. I'm not going to hold on to these people for 9 months when I don't have that many floors to sweep.